Hello, everyone. Thanks for joining us today, and welcome to this educational presentation where today we're going to be talking about buying inexpensive stocks before they take off. Now, there's no foolproof method for knowing exactly when a stock is going to take off from roughly being $2 to $10, but this is one of the best ways I know of by using one of our, in my opinion, most overlooked trading tools. And I'll show you exactly what I mean here in just a few seconds. For example, let's look at this chart in DSEY. Let's say you're interested in this stock, but nothing seems to be happening. For all intents and purposes, the stock is in a range, right? Every time you buy it, it goes down, you get stopped out, then you think it's going to take off again, so you get back in, it goes back down, you get stopped out. So you want to stay away from it until you have further evidence that it's really going to take off in one way or the other, okay? And then all of a sudden, this happens. Now, this was at the midpoint of March, roughly the beginning to mid of March, just about a month ago. And the news comes out, Yahoo Finance, Diversity to be acquired for $4.6 billion. So the stock's going to be bought out. And you say to yourself, boy, how come I always miss this stuff? I can't believe it. So you look to see what it's trading, and the stock, its shares are trading 38.5% higher in pre-market activity. So you're kicking yourself because you didn't do anything. You say to yourself, why do I always miss these things, And you look at the stock and you see it's taken off on the news. There's no way to get in now. You don't want to buy it here at the top. So you say to yourself, well, once again, I missed that big move. And I'm sure this happened to everyone, right? You ask yourself, this has happened more than once. Well, with today's educational presentation, I'm going to explain to you a often overlooked method that we have on our platform, which could have actually got you in right here. And you could have taken advantage of buying this a full week in advance of the news coming out. So this is what we're going to be talking about today. Buying specifically inexpensive stocks before they take off. And the only way you can apply this tool is on our platform, the PTS Primo charting platform that I developed with proprietary strategies that actually teaches you how to trade. So welcome to this educational presentation. My name is Steven Primo. I've been trading now for 46 years. I'm the president and founder of Specialist Trading. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Specialist is just someone who makes markets in roughly about 50 or 60 stocks. So I did that during the crash of '87 and the bull market that followed. And so what I've learned in my 46 years of trading is that there are a number of techniques, methods, or strategies that have high levels of consistency, but the majority of them do not. Many of them just do not work at all in terms of over time or longevity. So what I did was I teamed up with proprietary strategies roughly about 13 years ago, and we formulated Specialist Trading, where all I do is teach the techniques and methods that I've accumulated in my 46 years that really have high levels of consistency, so that hopefully you can become a consistent trader. And you'll see that in today's educational presentation. Now, before we begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on Twitter. There's our handle right there. I post different snapshots of strategies or signals that our strategies have generated on a daily basis and go into a little bit of detail as to why they were generated or what they're based off of. I also give you little bits of financial wisdom as well. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, I think one of the main things that stands in the way of most traders' success is that we're taught, myself included, when I started over 4 decades ago, we're taught basically to take ourselves out of the game. And what does this mean? Well, we're taught to blindly follow what someone else does or says. So you go to a website, or you go to a chat room, or you listen to some guy on TV telling you that the market's going to do this or the stock's going to do that. You should buy it. You should sell it. This is the way we're all taught in the beginning. And now here's the bad news. 80 to 85% of all traders fail. So it doesn't really make sense. If we're all taught that this is the way to, on the road to success, to trade this way, to listen to someone, then why do 80 to 85% of all traders fail? Well, for the simple reason that that method or that style doesn't work. When you take yourself out of the game and blindly follow what someone or something else is telling you what to do, you're basically telling the markets, I don't know what to do. I don't have enough experience. I don't have enough knowledge, so I'll let someone else do my trading for me. And there's no other career I can think of where someone would say that. Imagine a lawyer saying, well, I don't really know what to do. I don't really know how to try this case, so I think I'll let someone else decide how to do it for me. Or a brain surgeon saying, well, I really don't know how to operate. I don't really know how I should progress with this, so why don't you tell me how to do this? No one in the world would think that's a valid way to be in any career. But for some reason, traders think that's valid. That's the way we're supposed to learn how to trade. Well, it doesn't work going by the statistics. So the only thing I have seen that works is when you make your own trading decisions, when you don't blindly follow along what someone is telling you to do on a nightly basis, but you make your own trading decisions. Now, most traders don't like to do that because they say, well, I don't really know how to make my own trading decisions. This is the service we provide. We provide you with sound fundamental education, things that have stood the test of time, so that you will be able to make your own trading decisions, so that you'll be able to look at a stock and say in a matter of seconds what you think it should be doing based on this information. And it's really simple. It's, in fact, so much more simpler than trying to decipher what the news is, or what the interest rates mean, or what the earnings mean. It's so simple and it's very cut and dry, and you'll see that in today's educational presentation. So remember, once again, my goal is not to force feed you signals. If you come here today thinking I'm going to tell you what stock to buy or what I think the market's going to do, you've come to the wrong place, because that goes entirely against our philosophy. Our philosophy is not to trade for you, but to teach you how to trade with the specialist edge. Now, when I was struggling, when I first started trading some 46 years ago, this is the way I was taught by my mentors and what I believe has sustained me. And so hopefully I'll be able to do the same to all my students around the world. Okay. Now, before we begin, a few announcements. If you're having technical issues or if you have to leave early, don't worry. This presentation is being recorded, so each and every one of you will get a link to this recording. And also, if you have a question, please, I want you to ask me as many questions as possible, but please wait till the end of the class. I promise I'll get to each and every one of them at the end of the class, okay? This won't be very long, so write it down and try to remember it, and we'll answer all the questions then. All right, so let's begin with today's educational presentation. And so what is this tool that gives us, or designed this method for us to potentially capture these inexpensive stocks before they take off? And this tool is only found on our platform. These are the PTS dynamic stop levels, okay? Now, they're a proprietary tool that's auto-generated on our platform. But let me explain to you what exactly it does. It's a proprietary stop placement formula that moves with the ebb and flow of price, and is specifically designed to track the behavior of the market you are currently trading. You see, that's what we really focus on in specialist trading. We're tracking the behavior of the market. We're not looking at what the earnings are. We're not looking at what the economy is doing. We're not looking at any fundamental or economic news. We're looking at the thing we're trading, which is the market behavior of the specific issue we're looking at. Now, the dynamic stops can keep you in a winning trade for as long as possible. This is the original purpose of this, and this is why we developed it, because a lot of our students were saying, Steve, I'll get into a trade and then I'll get out too quickly. Sure, I have a nice little profit, but I left a lot on the table. So we developed this based on market behavior to keep you in a winning trade for as long as possible. For example, let's look at this weekly chart of Oracle. Now, let's say you bought the stock down here. This is going back 2 or 3 years ago, but let's just for educational purposes say you bought it right here, and you're thinking you're going to have a nice little gain here, but you'd like to squeeze out as much profit as possible. So what you would do is click on our platform, dynamic stops, and you'll see them automatically appear. So once you're in, you know exactly where your stop placement is. You could place your stop either here or here, excuse me. But either way, this is based off market behavior, and this is telling you the most advantageous place to get out if you're wrong. All right, so look what happens. Well, the stock goes up for a bit and then it starts to falter. This is where most people say, well, I'm getting out because that guy in that chat room said it's going much lower. Time to get out. But is it really? Because if we continue to apply the dynamic stop levels, it generated one right here. So had you waited and placed a stop there, well, you would have still been in the trade weeks later, and you had had another stop generated here. And you would have still been in the trade as it went up higher and higher. And you see how the stops are generated all the way up. So this way you're able to capture as much as possible if you have a really strong winning trade. And this can happen not only to the upside, but the downside as well. And in another market, you can apply it to any market, any time frame. Here's a daily chart of the British pound Canadian dollar. Let's say you sold short right here, or sold the currency pair, all right? You apply the dynamic stops on our platform, and you see here, this is your most advantageous place right here at the top to place your stop. Okay, you decide to take the trade, you go short, nothing much happens the next day, but then another stop is generated. So at this point, you've now lowered your risk down to here. It's tracking the trade. And as it goes lower, it continues to track it and track it. Now you've got a profit in hand, and now you're still short, and you've got a much better profit all the way down. So you see, that was the main purpose for the dynamic stops, to keep you in a winning trade as long as possible. But we discovered that there are other advantages to trading with the new dynamic stop levels. And that's what we're going to be talking about today, because this is probably one of our most overlooked applications for using this tool. And it's extremely powerful, as you'll see. I'm going to share with you a number of examples, but let me share with you the process, because the dynamic stops can be applied as breakout entries. This is something that just kind of fell into our lap after we had developed it, and we saw the power of this extra advantage of using our dynamic stops. Okay, here's the process. Look at this chart of AI, okay? This was just going back last month. The first thing you want to see is a stock heading lower. Now, we know this is a more expensive stock that we're going to be looking at later, but this is just for educational purposes only, okay? So we want to see a stock that's heading lower, that has a downward slope. The steeper the slope to the downside, the better, because that's going to mean it's going to get you in at a lower price, all right? So once we've established that this has been heading lower, then we want to obviously apply the dynamic stop. So we click it on our platform right here in the upper left-hand corner, and we'll see a drop-down menu. Now, since we want to be buying, we'll click on the buy stop, and they automatically appear, as you see right here, okay? So we have it right here at the top, and as the trade was progressing, or not trade, I should say, as the bars were progressing to the downside, you'll see how the stop continues to go lower and lower. Now, if we were short, we would use this to cover to get out. But remember, we're not in this trade. We're looking to go long. We're looking to buy. So it continues to generate, and the process is, we want to buy once we touch or trade higher than that, that displayed stop level. Now, this one is at 22.32, okay? Look what happened on the next bar. It opened lower and then went through. So if you had placed a limit here, a stop limit to buy at 22.32, that would have been your entry point right there. All right, now the second part of the process is, where do we protect ourselves? Because nothing is guaranteed to be 100% foolproof. So we know that this may not work. So what we want to do is go back in time, go backwards, and we'll place our stop just below the most recent low, which was right here. So we would have entered here and placed our stop here. Now, we know in advance how much we're going to be risking. So we would have known prior to this going above that if we bought at 22.32, our stop would be somewhere right here. So this would be our risk. Now, if this is too much for you, then great, don't take the trade. You see how we're developing this so that you're in charge. It's not like you're listening to some guy on TV and say, well, buy it at this level, and if it doesn't work, sell it here. And he's basically taking you out of the game. This is the market telling you that if I trade above this level, most likely I want to go higher. So you should jump on board. And if I go back down lower, well, most likely if I trade below that most recent low, that means the trade's not going to work out at all. So you're basing your decision off market behavior, not off what some guy says in a chat room. Remember, this is the way we're all taught. We're all taught to listen to someone on TV, to listen to someone in a blog, or go to a website, or go to a chat room, and they tell you what to buy or sell. And if the majority of traders are taught that way, why do the majority of traders fail? Once again, obviously, because it doesn't work. No two traders should ever trade alike. You should have a say and input into how you want to trade. The reason is because everyone has a different risk parameter. Some traders may say, I don't like a lot of risk. That, I can't sleep at night knowing I'm risking this much. Other traders may say, hey, I have a large bank account. I don't care about risk that much. Still, another trader may say, I don't want to trade stocks that are $50 or above. I want to trade inexpensive stocks. where someone else would say, no, I'll trade anything. So there's no reason for everyone to be trading the same way. Everyone comes to the table with different requests, different risk parameters. And that's why you should be in charge. You should never allow anyone to make a decision for you trading. And once again, as I said, that's the service we provide. We're providing you with all these techniques that have stood the test of time in terms of consistency, and then allow you to make your own decisions, okay? So let's say you had decided to buy right here at 22.32. Well, that's a nice little 48% price gain in just 2 weeks, all right? Remember, the advantage to this is to keeping you in a winning trade as long as possible. But the extra advantage is to getting you into these and to buying these inexpensive stocks before they take off. And that's the theme of today's educational presentation. All right, so you know the process. It's that simple. Let's look at some recent examples. Some of these examples just happened 3 to 4 weeks ago. Others just happened a couple of days ago. All right, here's a chart in RLX. All right, the first thing we want to see in this process is that we have a downward slope. And we do have a downward slope, okay? Now, once we see that, we apply the dynamic stops. And we see that none of them have been touched or violated. So we're tracking this as it goes lower. And so you see here, every time it went lower, if you were really interested in this stock, if you had done your own research and liked it, you could place a stop buy limit to buy 255. It didn't work out. Another one here. Now you cancel this, and now you could have it at 2.38. Okay. Or if you're lucky enough to be in front of your computer, you just wait and maybe an alert goes off, and then you say, oh, it's touched that. I'm going to buy it at the market. It's up to you. Remember, you're in charge. But either way, if you're using this technique, you're tracking this, and guess what? It trades there the next day. This was on the 29th, just a little bit, I'd say a little over a week ago. You would have bought right there. All right, now we go back in time and say, okay, this is the lowest low, so we'll place our stop right here. Okay, so we basically bought at 2.38, and we're going to be having our risk parameters roughly about 15 cents. And look what happens right after that. In 3 days, the stock price gained 22%. Okay. Now remember, this is not based on any news. This is not based on any economic announcement. It's just based on market behavior. And this is a powerful way for buying these inexpensive stocks before they take off. Here's another example right here, LFST. Okay, this is coming into last month. All right, so we're heading lower. We can see that downward slope. So the first thing we want to do is apply the dynamic stops. We apply them, and we see as the stock is heading lower, it's tracking it going lower. So here's our last one at 5.22. We could place a stop limit or watch it there, and look at it, just barely traded there. Now remember, the rule is it just has to touch there. Now if you want to be more conservative, you could say to yourself, well, listen, I want it to close above there. Once again, it's your decision. It's okay. There are different ways to trade this. But once it touches there, it's the trigger to start to be in the mindset to buy this. Let's say you were only concerned if it touched there, so you would have gone long right there. You go back in time, go back one bar and see that was the lowest low. So you place your stop right here, okay? And then the price of the stock gained 40% in just 3 weeks. You see how valuable this tool is? But believe me when I tell you, this is probably one of our most overlooked trading tools. A lot of our traders just don't use this. They like to look at a strategy, or they like to look at a trend following mechanism. This is really overlooked. If it's for you, this is something you really should be looking into. All right, we have a nice downward slope in DSEY. All right, this is the stock we looked at earlier, coming into March last month. We apply the dynamic stops, and we see none of them have been violated. They're still tracking it down. Here we are at 5.87 coming into March. It traded there, went higher, and then closed lower. So this is where students say, well, Steve, is this still valid? I mean, I have a loss now. It's lower than where I bought it. It looks like a reversal. And that guy in that chat room says I should get out because it reversed. All the institutions came in and sold. That's why it closed so much lower. And that candlestick class I took said this is a down doji and a really negative hanging man pattern. So I've got a lot of things going against me, right? Do you see how every decision I just said is based off what someone or something is telling me to do? What is the market telling me? The market's still saying it's okay. All we needed was it to touch that level. We have our protective stop, and if we are wrong, well, we're going to get out right here. Let's look what happened. Well, in the next week, it went up a little bit higher, but right back to where we bought. But had you held on, Guess what? That's when the news came out that it was going to be acquired for $4.6 billion. And it was trading 38.5% higher in pre-market activity. So what happened to the institutions selling right there, okay? What happened to the doji, or what happened to the hanging man, the negative candlestick patterns? Remember, those things can work, but in different contexts, in different environment. What we're looking at now, which is relatively short term, anywhere from a week to maybe 3 or 4 weeks, that really isn't required. We don't need that information. So as you can see, even before the news came out, the market was telling us it wanted to go higher and gave us a signal using this proprietary tool. That was a 38% gain in just 2 weeks. Let's look at this example on LAZR, okay? Same process, we're heading lower. We applied the dynamic stop levels. And as we can see here, it's going lower and lower. And right here at 6.78, it traded. So you could have presumably bought right there, placed your stop below the most recent low, and a 55% price gain in just 1 week. Remember, we're trying to help you so that you don't miss these big moves. And this is one, in my opinion, the best tool we have at specialist trading to get into these before they really take off. Let's look at GameStop, okay? This is coming back just a couple of weeks ago. Obviously, the stock is in a downward slope. As we applied the dynamic stops, we see that they're just tracking it all the way down. It hasn't been violated yet. It keeps going lower and lower until right here, which is just a couple of weeks ago, at roughly 16.73, a buy signal was generated. You go backwards, say, okay, I'll place my stop right here. All right, and look what happened. Obviously, there was some news that caused it to gap up, but did we know that? How could we know that? Because this is not based on any fundamental news. It's based on market behavior. And in my opinion, after trading for over 4 decades, I would trust market behavior much more than anything economically. Because how often have you seen some so-called supposedly great fundamental news come out and then the market or the stock does the opposite, right? I've seen so many times, even when I was trading on the floor of the stock exchange, fantastic news about a certain stock, and I saw it go straight down. Or I've seen terrible news about the market or a stock in particular, and I'd see it go straight up. So there's no real consistency in that. We want things that are cut and dry, like the dynamic stops. In other words, if that level is touched, and if you place your stop, well, we're hopefully having a nice price jump of 60% in just 2 days. All right, here's a weekly chart, because I know some of you like to trade swing charts and weekly time frames. This can be applied to any market, any time frame. We have a weekly chart of GPS, okay? This was just about a year ago. As we see, we have a steep downward slope, and as we have the downward slope, the dynamic stops are tracking it all the way down until right here, roughly about $9. So using the same process, just because it's a weekly time frame doesn't mean anything changes. You could have bought here, placed your low stop just below the most previous low, and look what happened. It went up for about 3 or 4 weeks and then starts to go lower. This is where students start to get scared. Remember, you're in charge. If you wanted to sell out and break even or take a small loss, it's up to you. But if you're holding it for the long term, we still have not broken that stop yet, because the stop goes all the way right here. So if you held it and said, listen, I'm just going to wait till I get stopped out, and then that'll tell me. I'll let the market take me out instead of my fears or some guy on TV saying this is going lower. And that would have been a wise decision, because look what happened. The stock gained 70% in the next 3 months. All right, let's look at PACB. Now, I'm showing you this because I want you to be aware that nothing works 100% of the time, but there's a good thing in consistency. Now, I know a lot of you think consistency means that that's a method that always wins, but consistency means a method that's able to recoup its losses. You see, because there's no method in the world, no strategy, no technique that has 100% winners. They're all going to have losses from time to time. That's perfectly natural. Just as the way some athlete's going to strike out or not make a basket, or some actor or actress is not going to have a hit movie or a hit album. But what separates the good ones from the faulty ones is that they're able to bounce back and get back on top. That's what consistency means. And you can do the same thing with a trading strategy. Now here we're following the process in PACB, PACB, and we get long here at 9.30. The next day it goes up pretty well. We have our stop here. And then look what happens. We get stopped out. Now we lost 60 cents, okay? Now, depending on how much money you're investing, you know, it could be a lot or a little, but the price amount is very small, 60 cents, okay? So does this mean, well, this one didn't work out, we forget about it and go look for another, or just stop trading this? Well, we shouldn't stop trading this, because remember, consistency means you're able to recoup those losses. So we want to, if you have the choice, to continue to look at this as a buying opportunity, because for all intents and purposes, we're still going lower. So you can continue to apply, and as we see here, we're really not rallying yet. So you can continue to apply the dynamic stop levels since we have a downward slope. And as we see, they're right here and right here tracking, so we're starting over. If we trade right here at the price again, we'll go long, which we did. Now we place our stop here at the most recent lowest low, and we start over again. Remember, we lost 60 cents on the previous one. We could have made $2.50 on the next one. So that's you know, a good 4 times what we lost that potentially could have gained back. That's what we mean by having a consistent method. And also that's what we mean by getting back on the trade, not just going and sulking in the corner, because oftentimes you'll be able to recoup it. Here's another example of the same process, PALI. We would have bought here at 2.09, placed our stop level right here, and in 3 or 4 days, we're stopped out. We lost 16 cents. Not a lot, but it all depends on how much you invested. Okay, so should we throw this out the window and say this stuff doesn't work? Well, if we track it, we see it's still continuing a downward slope. So this still may be an eligible candidate to go long. We apply the dynamic stops once again, and here at 1.83, we would have a limit, a stop limit to buy, and it traded above there. So we could have bought, you know, maybe a few cents higher. We place our stop here, and we've got a nice profit. Looks like we've already made back what we lost. And if we held out another day later, we could have made $1.70. Remember, we lost 16 cents, but if we invested the same amount of money, we could have made $1.70 in the next week or so. This was a 90% price gain in just 2 days. Remember, the title of today's presentation is how to buy or capture those inexpensive stocks that are just before they take off. Oh, went a little advanced there. Here's KC, okay? Kingsoft Cloud Holdings. All right, we would have bought right here at 4.38, placed our stop right here about 3.75. So we're risking about 60 cents, 65 cents, we get stopped out, okay? Should we want a refund and say this stuff doesn't work? No, because we're given another chance. We continue to apply the dynamic stops, get back in, place our stop roughly about the same place, and look what happened. 110% price gain in 2 weeks. We lost 65 cents, but we had the potential to make 5 points. Here's an example in NAS. Let's go over the process once again, okay? Just to get it in you so that you understand how simple this is. We want to see a stock that has a lower sloping range. And obviously this isn't going really downward, but it's still sloping lower. So that meets our qualifications. So once we see that, and especially since it's an inexpensive stock, less than $5 or so, we apply the dynamic stop on our platform, click it on, and in the drop-down menu, click on Buy Stop, and they'll automatically appear. Now, if they have not been violated yet, that's great. That means that you can continue to place an order to buy at these levels, canceling every time the previous one and moving it lower so that you can buy at a lower price. Now, this is at 5.54. This was just a few weeks ago, okay? Let's see what happened. Well, it traded above there on the 24th, so we could have gotten long, and we have a nice little profit at the end of the day. Now, we place our stop just below this low, so we have a nice little trade. Okay, we could move our stop to unchanged, we could exit, but if we held on, that's 150% price gain in just 5 days. This just happened like last week. Okay, we went from 4.5 up to 11. Okay, let's review now. We've gone through the process. Let's review what we taught you. Remember, This dynamic stops, this stop price is specifically based on market behavior. It's not based on news. It's not based on a pattern. It's not based on earnings or interest rates. It's based on market behavior, what the market is doing. As we see here, the main advantage was to keep you in a trade for as long as possible. Here are the dynamic stops that once they would touch there, that's where you would exit the trade if you were long. But there are other advantages to trading with the new dynamic stop levels. And this is what we discussed today. This is the perfect tool for breakout traders, especially for breakout traders who like to trade inexpensive stocks. We went through the process. We showed you how simple it is. And we showed you how we had trades here in the last couple of weeks, how you could have really increased your odds for consistency by applying this simple but very powerful tool. As I said in the beginning, this is probably our most overlooked trading tool at Specialist Trading and Pro Trader Strategies. Okay, let me tell you about a great offer we have for all of you attending today's presentation. This is our Dynamic Stop two-part course. This is a full double video course, okay? Now, remember, the stops are based on market behavior. They're not, displayed randomly. You can apply them to any strategy, any market or time frame, but simply because we were talking about low-priced, inexpensive stocks today, we only talked about stocks, but you can apply them to currency pairs, futures, commodities, crypto. It makes no difference. Now, here's a good thing about this two-part course. We're going to share with you 3 proprietary trading techniques included within the course. But you see that little asterisk there. This is advanced. This is for more advanced trading with the dynamic stops. Now, the PET D is required for this advanced type of trading. Now, what I just shared with you today takes nothing else but the dynamic stop. But the PET D is another of our proprietary color bar tools that really tells you the short-term trend. And there's a great way to trade the dynamic stops with the PET D. So that's required. So if you don't have the PET D, you'll not be able to apply these advanced proprietary trading techniques. But you can still use it as I taught you today, okay? Remember, you can apply to your current strategy or build your own, and all these stop levels are auto-generated. Now, if you're still not convinced, if you still don't think, well, okay, but it's not really for me. I mean, Steve probably cherry-picked some of these ones that were in the news or that took off, and maybe they were a month ago. How do I know this stuff is really current, is going to work? Well, let me share with you a couple more examples just to make sure you fully understand. Here's a stock called IFRX, okay? InflaRx. Now, let's go through the process. Is it heading straight up? No, it's got a downward slope. So that's what we want, right? We want a downward slope. The more steep to the downside, the better. Now, this one's heading downward, and since we're only looking to capture inexpensive stocks, it's below $5, so that fits our requirement. So this is looking well. If you were a member of this course, all you'd have to do on the platform is click on Dynamic Stops, and you would see them appear automatically. Now, none of them have been violated. We have 2.30, 2.27, 2.01, went all the way back up, another one at the same price, 2.01, but it hasn't traded there yet, 197, 188, and all this time you could be placing stop limit orders to enter there or watch it and just enter at your own leisure. Nothing happened until the 22nd of last month, just a couple of weeks ago, okay? Right at this point, at $1.88, you could have entered right there. Now, what's the second part of the process? We want to protect ourselves just in case it doesn't work out. So we go back 1 bar, that was the low, and we place our stop there, okay? So we're basically risking about 28, 30 cents at the most. And look what happened. Price skyrocketed 200% in 2 weeks. Now, I took this snapshot today. This is what happened today, this morning, prior to the presentation. So if you think the presentation was just based on cherry picking when I'm looking at what happened 6 months ago, no, this is happening all the time. You could have taken advantage of these. Here's another example. GFAI, all right? Another inexpensive stock. It was trading roughly about 10 or so, but look at the nice downward slope. The stock has gone all the way down into the 5 levels. We apply the dynamic stops once again, and we see that they're formatted, auto-formatted, and they have not been violated yet. Now, this one doesn't have a lot, but the second one was touched at 5.19. So on the 21st, once again, you could have purchased this. and bought right there. Go back in time and see where's the lowest low right here. So place your stop. And even though nothing happened for the next week or two, if you held on, the stop was never touched. So you're still in the trade. All right. Just nothing has happened yet until this. All right. This just happened a couple of days ago. The price of GFAA soared 16 points. Remember, you would have bought it at 5.20. It soared 16 points or 270% in just 2 weeks. So this is happening all the time. If you're the type of trader who always says, gosh, I always miss this big moves, wouldn't you like a trading technique like this to at least have some structure for you to get into a stock, possibly before it takes off like this? And we're not guaranteeing that every stock is going to go up 270% or 16 points, but you have a high probability for consistency using this, what I call one of our most overlooked trading techniques. Don't wait another year to become a consistent trader. I know a lot of you are saying, well, I'll take advantage of it later, or I'll just see how my strategy does. And you continue to go down that rabbit hole of losing more and more money and nothing working for you. Take charge of your trading. Don't rely on someone to tell you what to buy or sell. Take charge of your trading. Have a plan in place that you know is based off market behavior, and you're in charge of making your own decisions. Okay, so let's break it down. Now, in order to trade this, you're actually going to need a full year of the PTS Primo charting platform, because we're providing that. That's always included with this course. So you're going to get a full year of the PTS Primo charting absolutely free, okay? This is included. Now, the regular course price is $39.95, roughly about $4,000. If we included the price of the platform, we're talking about an extra $2,000. So that's close to $6,000. But here's what we're going to do. We're not going to charge you $6,000 or even $39.95. We're going to discount the price $1,000 down to $29.95. And on top of that, not only will you get a full year of the platform, but you'll also have the ability to establish a payment plan. So if you still can't come up with $29.95, that's okay. For a small deposit, you can still be up and running as early as today and have the dynamic stops on the platform with a full year of the platform and be able to watch the course in full at your own leisure. Okay, this is how simple it is to really get on board with the dynamic stop 2-part course. Remember, normally both of these things, the full year of the platform along with the dynamic stop 2-part course, would cost close to $6,000. We've discounted it in half down to $29.95, and you can establish a payment plan if you don't want to pay outright. You can have a small deposit and still be up and running. So here's how to take advantage of this. Contact Pro Trader Strategies. They're in charge of all the pricing and discounts. You can call them directly at area code 310-598-6677, and they will be able to help you and walk you through a payment plan. Or if you want to pay it outright, you can contact them and they'll be able to establish the payment over the phone. Now, that link you see at the bottom of the page is the link that will take you to the info page. You can also sign up online if you'd like. It's not a live link, but we've just posted in the chat box a live link. So you can go to the chat box, open that up, and it will take you to the info page. All right. So I'm going to leave this information up here for you to copy down the phone number. And if you have a question, now's the time to ask. Let me see. I believe there may be one question here. Someone's asking, can this work intraday? Yes, you can. As I always tell my students, you can apply most of our methods any market, any time frame, but just remember that the smaller the time frame, the more propensity for what we call noise. That's where you may get whipsawed. So remember where I told you where if a stock is heading lower and all of a sudden you get stopped out and you get back in, well, you may have to do that maybe a couple of times before it takes off, because that's just the nature of smaller time frames. And when I say smaller time frames, I'm not talking about an hour time frame. I'm talking about 5 minutes, maybe tick charts, things like that, okay? So just know that you may have this more of a whipsaw effect, because that's with any method when you're in a smaller time frame, okay? Just want to make sure you understand that. Someone's asking, does this strategy work if I trade stock options? Well, yes, you can apply stock options to anything. Once again, I assume we're not talking about intraday. We're talking about daily bars. But remember, everything is based off of what the market is doing, the market behavior on the chart. So in other words, if you see the dynamic stop, let's say, is at 2.5, Well, obviously, if you're not going to buy the stock, when the stock trades there, that means you would have to buy your option at that price or buy some type of spread, whatever it is, at that price. So that would be the trigger to enter into the option. Okay. Now, you're not going to place a stop based off the option. The stop is based off of the stock price stop. So once again, even if you feel that the option is still doing okay, if you get stopped out with the stock, you should exit the option as well. So everything you're seeing should be based off, in other words, what's happening on the chart, not what's happening with the option. But yes, we have a number of students who trade our strategies and methods that are not for option traders. We're just basically highlighting high probability entry and stop placement, and they just apply stops to them. Sure, you can do that very easily. Another question, if the PET D included in the $29.95 price? No, the PET D is not included in the $29.95 price. If I go back here, let me just look. As we saw, PET D is required for those advanced trading techniques. Now, it's not required to use the dynamic stop levels, but for the advanced trading techniques, yes, it is. But as I said, ProTrader Strategies is extremely flexible. They'd be happy to work with you, especially if you're a past customer or if you're really interested in purchasing this. They'd be happy to work with you and give you some type of a discount. So I would really suggest, even with no obligation, contact ProTrader Strategies and just give them a call and say, listen, I'm interested in this, and what can you do for me if I wanted to get the PET D? And they'll give you some type of quote, and you can make your own decision after that, okay? Because ProTrader Strategies is my sister site. They're in charge of all the pricing and all the discounts. Specialist trading is what I'm in charge of, and I'm in charge of all the teaching and the webinars and lecturing. So I have no idea what they would discount you to, but I'm sure I've been told by students that they've been giving out very good deals in the past. So I'm sure they would be more than happy to, okay, just to get you involved in this. Good questions. Any more questions? Someone says, can I use this on currency pairs? Sure. I mean, the only reason I didn't show any currency pairs or other time frames or other markets is because today's title was for inexpensive stocks. There have been a number of students that have told me lately that they always miss these inexpensive stocks, and they always miss the big moves. And so I wanted to share with you that there is a way to take advantage of that. There is a way to really, be able to see how you can get back involved, but you have to be able to know how to apply this process. Okay. Now, remember, if you have a question, just go to the question and answer or to the chat box, and I'll be able to see your question there, okay? I know some people are raising their hands, but I can't see the question unless you type it into the question and answer box, or if you type it into the webinar chat. As I said earlier, ProTrader Strategies is extremely, extremely flexible. They're more than happy to work with you. We've been around for a while, and we have a number of students. In fact, we have students in over 115 countries around the world and in every state in the United States. So please, don't worry that this is just a sales job. We're happy to work with anyone, and we just want to take your trading to another level, okay? Someone is saying, I arrived late. Is there recording? Yes. Everyone will be getting a link to this recording, so you can watch this at your own leisure, okay? So if you have to, leave, or if you had to have left early, or if you were having technical issues, don't worry, everyone will get a link to this recording, okay? Okay, if there are no further questions, I just want to say thank you so much for taking time out of your Wednesday. I really feel this is a great, great way to get acquainted with us. I know it can be expensive for some people, but remember, ProTrader Strategies is more than willing to work with anyone. For a small deposit, you can still be up and running as early as today. You'll get the 2-part course. You can watch it whenever you'd like. You'll also get the full year of the platform installed on your computer. We have a great tech support department, and that can happen as early as today. So please give them a call. Even if you're just interested, they can give you a quote and you can think about it. But just don't sit on it too long, because remember, if you think about this for a couple of weeks or even a month, and then you say, wow, my strategy is killing me, nothing is working, I'm going to take advantage of that dynamic stop class I saw Steve Primo give, well, the price may be back up to $6,000. So take advantage of this. This is a great, great price and for a great, great technique, okay? Okay, as we close and take one last look at our disclaimer, thank you so much for attending. I hope you learned something. I hope you see the power behind this great technique and this great indicator. But most especially, I look forward to all of you becoming students of mine in the Dynamic Stop course. Thank you so much. Have a great trading day and a great trading week. I'll see you next time. Bye-bye.